Hey everybody. So I'm gonna go over a few things today. I'm gonna go over Fibonacci retracement levels, how to use them, and how I choose price targets for the future, especially if stocks are near all-time highs and there's no upcoming resistance. How do I determine price target levels? So I'm gonna share how to do that. I got a few requests to share how to do that. And then I'm gonna go over my watch list, a few stocks that I'm watching, and I'm gonna go over the few plays that I'm already in with you guys. So first thing I want to say about this upcoming week is we have a few bigger companies reporting earnings this week. We have Netflix, we have Domino's, I believe they're reporting it this week, but more importantly, in my opinion, we have bigger companies, the main companies. We have Microsoft, we have Amazon. I'm sure there's more that are reporting the week after, so we can hopefully take advantage of this opportunity and we can catch some nice ER run-ups coming into this upcoming week. So I wanted to share that. That's kind of my thought process. That's my number one goal going into next week, or going into this upcoming week, to try to catch the earning run-ups on some of these bigger companies that have been doing well, such as tech, Amazon, Microsoft, companies like this, and then even possibly get into a few plays for some companies that report in a few weeks to a month and just ride it out. That's sort of my plan. So now that I got that out of the way, I'm going to share the two things. First, I'm going to go over Fibonacci retracement levels. I've gone over both of these things, both price targets and Fibonacci retracement levels, in my previous videos briefly, but I'll go over them again because I've gotten multiple requests to go over both. So first thing about Fibonacci retracement levels, I'm not an expert, I don't know if there's any right or wrong way, but I'll just show how I do them. So if you're on Thinkorswim, you could go to drawings right here. You go down to drawing tools, and then it's going to be this percentage one. This is the one I use. Fibonacci retracements is also Fibonacci extensions. I use Fibonacci retracements, so I click this percentage right here, and then what I do is you can choose any time frame, because you can do, depends how long you want your time frame to be. You could go from the absolute high to the low, or you can do a shorter time frame, but I'll start off by doing this longer time frame here. So what I'm going to do is I'm going to mark with my Fibonacci retracement drawing. I'm going to mark the absolute top right here, 32.15, and I'm going to bring it to the low of 16.26, the March low right here. And now we're going to see 1, 2, 3, 4, 5, 6, 7 levels right here in between these. I'm going to go over these, and then if you go up, we have 3 more levels, I believe, above. So a total of 10 levels. So I'm going to go over these 7 right now in between. I have the 100%, 78.6, 61.8, 50%, 38.2, 23.6, and 0% levels. Now, when you first start using Fibonacci retracement levels, I'm pretty sure there's more levels. I remember I clicked off of them though, so you can look at these right here. These are the only levels I use. Like I said, I'm pretty sure there are more. And if there are, you can exit out. I just use these levels. These are the levels that I find to be, significant enough where price actually respects them. So these are the only levels I use. 0 through 1, and then 78.6, 61.8, 5, 38.2, 23.6, and then I have the 3 levels above 100, 1.61, 2.61, and 4.23. When you also get them, you can also change the color. I have mine as blue. You can change the color like this to set color for all curves. I changed mine to blue, and you can change the style right here. I have mine on the dotted lines, and you can change the width. I have mine all on the lowest, the lowest width, besides 0 and 1. Those I have a little bit wider just to mark out because those levels are significant. So as you can see, after we drew in the top and the low, you can already see that price respects these levels pretty well. You can see that price pulled back to the 38.2 level. Price pulled back to the 61.8 level here. We had a small pullback to the 78.6. So you can see price respects these levels. It had a hard time breaking 23.6, so once it did, it shot up. So these can definitely be future levels that you can look for price to pull back to. But in reality, this time frame is too big, in my opinion, to trade on. This is from the high to the low. So usually when I'm doing Fibonacci retracement levels, I look on lower time frames. So you can go to the 4-hour time frame and you can mark maybe from 32.15 down to right here, I would say, which is this consolidation area of 25.54. And now you can have shorter time frame levels that are closer together, and then you can look at these levels for pullbacks. Now, I don't want a lot of people to get confused about Fibonacci retracement levels and think that they're like these magic levels. It's just that like price doesn't have to respect them. They're just levels. Fibonacci retracement levels, from what I know of, are just levels, are percentages used in like a lot of aspects in the world. I think they're used in nature and they're used in other things, and people brought them into trading, and enough people use them where price respects these levels. So you have to have your drawings, you know, pretty accurate, and then if you have them lined up like other investors or traders, you'll find that price will tend to respect those levels most times, and it's mainly the main percentages like 61.8, 78.6, 50%, 23.6. So you'll see most times price will respect them to a degree. As you can see, again, a pullback to the 38.2, but it's definitely not guaranteed. So now you can go to a shorter time frame, a 1 hour, and then you can do 32.15, and you could do it down to this pullback right here. And again, you can see price pulled back to 78.6. And now that we're on a shorter time frame, I can show you the higher levels as well. So we have these three higher levels, one coming in at 161.8%. You have 261.8 coming in at 41.68, and 423.6 coming in at 51.16. Now these levels over 100%, they can be used as next resistance levels, or even price targets if stocks are near all-time highs like Amazon, or there's no upcoming resistance. So you can use these levels, and price tends to respect these upcoming levels over 100%. Now the thing is, 161.8, this is over 300 points from where Amazon is currently at, so these would have to be longer time frame price target levels. And then 261.8, this is 41.68, so this is almost 1,000 points higher than where Amazon's at now. So these would definitely be longer term price levels. So this is one way you can determine upcoming price targets or upcoming resistance, but there's another way I like to use. So if you go to Daku, you can see I had July 5th weekly high price target set at 214, and you can see Daku closed, it hit a high of 217 and closed right under this level. And this was a weekly price target I had for Daku, and that I made at the beginning of last week or during the weekend. And I didn't use Fibonacci retracement levels for this, but I used the ATR, average true range, to determine this level. And this is something I talked about in one of my previous videos, and I'll go over again. So this is how I determine price target levels a lot of times, especially on stocks that are at all-time highs, which a lot of stocks are right now, a lot of tech stocks anyway. So if you go to, so how I determine this, first off, so I'm gonna remove this if I can. Okay, it's not loading me. I have to go here. Average true range. Alright, so you go to studies, edit studies, ATR, or is it average true range? ATR right there. Double click, and there you go. You can put it in like that. It's really that simple. And then you can see the average true range, which is the average range a stock moved in that time frame. So on average, Microsoft moves 4.96 points in a day because we're on the daily time frame. On average, Microsoft moves 1.6 points in an hour. We're on an hourly time frame, and it moves 11.72 points on average in a week because we're on a weekly time frame. Now, this does not, by average true range, it doesn't mean that the stock goes up 7 points and then it will come down 4 points, making it 11 points. That's not what it means. It means it moves, the difference is 11 points from where it opens and closes. So that either means it opens up at 200 and it could go up to 211, or it can open at 200, it could go down to 189, or it could open at 200, it could go to 206, and then it could come down and close at 195, making it 11 points. That's what it means by 11 points. So you can use this level, the ATR, a lot of times to determine price targets or have a pretty good guess for stocks near all-time highs. So how I would do this would be, I would go to Microsoft. The stock's at 216.38 right now. So what I would do is I'll pull up a calculator and see that it moves an average of 11.72 points in a week. So I would just put in 216. You don't have to put in the decimals. It doesn't have to be accurate. And I just add 11, 227. So this is just a guide, and I would say 227 is Microsoft's weekly high that it can hit. It could always go higher, and it could definitely close lower. But this is just a level, and I would call it, because we're going into the week of the 13th, 713 weekly high price target. I'll make this different color, and I'll make it a different style, and I would turn on name. There we go. So that would be my weekly price target for Microsoft. You can do the same with a different stock like Amazon. It's trading 172 points on average a week. Stock's at 32.15. 32.15 plus 172, 33.87. And I mean, yeah, you can just, when you're doing price targets, you can literally just place it anywhere, and then you can change it here to make it exact. So 33.87. Purple on the right. 713 weekly high price target. So that would be my weekly high. This is a guide, and it's just showing me if Amazon was to move. Where did it go? If Amazon was to move, let me see to the left. If Amazon was to move up all week and just run up, you can see a weekly high price target. You get a weekly high of 33.87. Right now trading at 32.50 or 32.03. So that would be what I would be looking for. So now that I showed you how to determine Fibonacci levels, or how to use them, and how to determine price targets, I'm going to go over a few stocks I'm going to be watching going into next week, as well as a few positions I'm already in. So I'm going to go over the 3 positions I'm already in. The first one being Boeing. I'll go over Boeing first because I think this is the first position I entered. Let me remove that. So we entered Boeing. We entered Boeing on the 9th, I believe, and we entered right around here. I entered once, we saw a bounce, and then a bounce out. We saw a drop, and then a bounce out of this demand zone right here. And we entered right around here. We got into August 21st, 210 calls, and Boeing went up and then came down the rest of the day. Now on Friday, Boeing opened lower. It opened in this demand zone. I had a stop loss below 169. It hit 169.75, and then it shot up the rest of the day and closed at 178. Now this trade is up about 5%, I believe, right now, and I have a price target of 180. It was up about 20% over here. I think it's up about 5% because the spread was wide at close, so we'll see how it opens on Monday. But a price target of 185, that should give us about 20 to 25%, maybe even higher on the trade. You can see 30%, and depending how it reacts, Boeing has earnings later this month. If it breaks through 180 with ease, we may just ride it out again, and then we'll use this as a level to possibly cut the trade at if it drops below. So I'll manage this, but this trade is working out pretty well on the daily or the longer time frames. It looks really good. It dropped in, we got in around its low, opened lower, and then came up. If we can see a push and break above this 21 SMA line right now on this week, it would look really good. Again, the weekly chart looks really good because we had this indecision candle right here. We dropped, but we have a lower wick right now coming in, showing that buyers bought this up. So if we can get a green candle this week, that would look really nice. Go over Microsoft. We grabbed the 731 July 31st to 35 calls. These are down about 6% or so right now, and it's just because they're further out of the money. Closer expiration, less than a month, and Microsoft has been consolidating the past 2 days. We got in right around 213. Microsoft dumped on Friday, and slowly worked its way up throughout the day, but nothing crazy. Didn't break the high of Thursday. It kind of had an inside day. Again, daily chart, I'm happy with the daily chart. We had all-time high of 216 on Thursday, came back down, and we gapped down, but we're still holding this lower trend line that it broke out of right here. And this is my stop loss level. I said this before. This is the level I'll cut losses at if Microsoft breaks below. But we're still above, and we have a nice lower wick showing that buyers bought it up. So if we can break 216, I think we can see 220 this week, especially with earnings run up. Now the next play I'm in is Chegg. This isn't something I posted, but I just want to share this. Now the reason I didn't post this play is because this is my first time playing Chegg. I'm not familiar with the stock, and I honestly wasn't too confident in the play. But there was a pullback on Thursday, and then it hit all-time highs on Friday. I think Chegg can have a significant earnings run-up. They report August 3rd, so they still have some time too. So I'm actually looking to add more to this position. I was going to add more on Friday, but we just shot up so much. So any pullback, I'll look to add more to this position, and if I do add more, I'll post it too. I think, Chegg, again, I could set a weekly price target and move 6.5 points. It's like 81 right there. And this would be a level I'll be looking at. I have 85 calls. I have the August 21st 85 calls. There we go. So this is something I'm going to be watching. I think Chegg could have a significant earnings run up. I know a ton of people use it, especially during the pandemic, and it's a stock that's had momentum ever since. Ever since it broke out of 69 or 70, it's just been going up. I think it can continue up. So those are the 3 plays I'm in right now. I'm going to go over a few stocks I'll be watching going into next week. So I'm going to be watching plays that can have earnings run ups and just stocks that have a ton of momentum behind them right now that can continue. So one of them is Amazon. Amazon reports on the 23rd. And I think this thing can continue going until then. It's just so expensive, so I was thinking about possibly doing a debit spread. And if I was thinking a 32.60, 32.50 on July 17th. I didn't do that right. 32. I was thinking something like this. Right now it says it's 243, which is $243 a contract. And this is definitely going to change on Monday, so I wouldn't even pay attention to this. But what this is saying, if you go to here, this is my best way to explain it. If you add it to here, do I have it added? No, I don't. Okay, so let me add it to this simulation right here. But basically it's saying if Amazon closes above 32.60 by Friday, which I think is very possible, that's only 60 points from where it is now, then you will get max profit. And it's saying the trade's 243 right now, which means the max profit's around 750 something. Good. You can find out if I 32.60 like that. Alright, now if you go to risk profile, you can see right here, once Amazon trades, I have 2 added, odd one. Okay, if Amazon closes above 32.60 by Friday, you'll receive a max profit of 757, and you can have a max loss of 243 contract, and that's if Amazon closes below 32.60. Now you can always, this purple line is before expiration, and you can always close the trade before expiration. So you won't get max profit if you do, but you always can. Now if Amazon closes above 32.60, 757, 243, that's more than a 300% gain per contract. So this is just a cheaper way of playing Amazon. This is something that I'm thinking about doing, and you don't have to go crazy far out of the money with a crappy contract. You can go closer to the money, and with Amazon moving an average of over 100 points a week, it's very possible the week before earnings we see a 60 point move up. So this would be a play that I'm definitely looking at. I'm thinking of grabbing maybe 2 contracts, which would be risking $486 to possibly make $1540. And I think it has pretty good odds in my opinion, so this would be a play that I'm looking at. You have Costco. Now, Costco doesn't report earnings for a while, I don't think. Yeah, they report in September, so this is more of a momentum play, but it's looking really good right now. If we can see a pullback and hold of 325, I can say we can grab some longer contracts, and this thing could continue up, so this will be a play that I'm looking at. eBay has been crazy. After it broke out of this 50 level, it's been going up, and actually eBay looks a lot like Amazon's chart in my opinion. Let me see if I can, let me remove these. Yeah, eBay's chart almost looks a bit similar to Amazon's, which is kind of funny. And eBay's only $60 right now. I'm gonna look for a possible pullback. I mean, this thing's been getting bought up after every pullback, so there's not really any support levels. You could say maybe right there. It's been like popping up, slowly coming down, then popping up the next day. It's been holding this 21 SMA line really well, so you can honestly just look for a pullback to the 21 SMA. It looks like it's getting a little top heavy right here. It's around 60, so it may pull back a bit. Maybe a pullback to the 50 SMA, and then I'll look for an entry there. But this is just a stock where I'll be looking to buy the dip on, possibly. Peloton, they report August 5th, so again, they have a few weeks. I would be looking for a pullback to 60 if we can see one. I mean, this thing shot up heavy on Friday, so I think it's due for a bit of a pullback. Shot up over 6%, so you can maybe see a pullback and then look to get in for this for an earnings run-up. Tesla's insane, man. Went up 10%, 150 points on Friday after it broke out of this 1407 level, 1410 level right here, around here. Tesla's another one where I wouldn't want to play a naked contract. I would look to go with a debit spread. And now you can get, let me see, this is going to load. Now you can get creative with these. It's all based on your risk tolerance. You can go longer expiration, further out of the money. Or you can go closer if you wanted to play ER, which I was thinking. They report on the 22nd. I was thinking possibly playing Tesla's earnings with a 1800. Oh, that was wrong. With an 1800 1780 credit spread, or debit spread, sorry, expiring the 24th. Now this would be $440 with, oh no, it's actually this right now. Yeah, it's $440, and it has a $2,000 spread, a $20 spread times 100, minus 440, with a chance to make about $1,500 if Tesla closed above 1,800 by the 24th. This is definitely a reach. This is saying, I mean, this would only happen, in my opinion, if Tesla has really good earnings and it shoots up and it continues running up this week. But I mean, Tesla, can't count anything out. This is a cheaper play with a high, you know, it's $440 to make like over $1,500. So I would say this is a play that I may look at. If I do, I'm only looking to grab one though. You've got to be very careful with ERs, and you can't put in more than you're willing to lose. So those are really it for the 5 stocks I'll be watching. If anything else comes up, I'll let you guys know, of course. So hope you guys all have a great weekend, and hope you guys, you know, I wish you guys well this trading week. All gonna crush it.